Before we get into the numbers, let's answer the big question. What is Pluxee, and why does it matter in today's business world? Pluxee is a global leader in employee benefits. Think lunch vouchers, gift cards, and wellness perks. But it's not just about handing out perks. It's about creating a culture where employees feel valued, motivated, and connected to their workplace. Pluxee designs the digital platforms and innovative products that companies use to reward and recognize their teams. These tools help businesses boost morale, increase productivity, and retain top talent in a competitive market. Their business model is simple but powerful. Pluxee earns fees from companies for providing these services, making it easy for organizations to outsource employee rewards and focus on what they do best. The more clients Pluxee serves and the more benefits they offer, the more revenue they generate. Their client base spans small startups to global giants, all looking to keep their teams happy. But here's the kicker: float revenue, a clever financial advantage that sets Pluxee apart from traditional service providers. When companies prepay for employee benefits, that cash doesn't just sit idle. It stays with Pluxee for a period, creating a pool of funds known as the float. Pluxee invests this float in safe, low-risk assets. Think government bonds or high-grade securities, earning extra income with minimal risk, all while ensuring client funds are secure. This dual revenue model, service fees plus float income, creates a resilient, scalable business that can weather economic ups and downs and grow steadily over time. Pluxee recently spun off from Sodexo, a major global services company, to focus entirely on this high-growth, digital-first market and accelerate innovation. Today, Pluxee is competing on a global scale, from Brazil to Europe and beyond, offering slick digital apps and building a vast merchant network that makes employee benefits easy to use anywhere. It's not just about vouchers anymore, it's about managing a sophisticated financial ecosystem that benefits from both world-class service and smart capital management. Understanding this business model is key to seeing why Pluxee stands out as a winner in the employee benefits space, and why investors and clients alike are paying attention. The numbers we'll see next prove just how effective and future-proof this approach is. Let's dive in and see what makes Pluxee's strategy so compelling. Let's dive into the numbers and see what's driving Pluxee's momentum as we kick off 2026. In the first quarter of fiscal 2026, Pluxee reported an impressive $308 million in total revenue, setting a strong tone for the year ahead. That's a 9% organic growth year over year, evidence that the company's core business is not just stable, but thriving and expanding in a competitive market. Operating revenue, which represents their main service fees, reached $268 million, also up 9%. This consistent growth highlights the strength of their business model and customer demand. Float revenue, interest earned on client funds, came in at $40 million, marking an 8.5% increase. This stream is a key contributor to overall profitability. High interest rates, especially in Brazil, played a significant role in boosting float income, giving Pluxee an extra edge in global markets. This dual-engine growth, services and float, makes Pluxee's business model robust, allowing it to weather market fluctuations and seize new opportunities. Even with an 8% currency headwind, which can often drag down results, Pluxee managed to post strong numbers and maintain momentum. Without these currency impacts, the numbers would look even more impressive, underscoring the underlying strength of the business. Pluxee is growing despite global economic noise and uncertainty, showing resilience in the face of external challenges. They're winning by selling more services, expanding their client base, and managing cash flow with discipline and strategic foresight. These results are a testament to solid execution and smart decision-making, not just luck or favorable conditions. The business is resilient, adaptable, and built for long-term growth, with a team that's ready to tackle whatever comes next. Pluxee is proving its value, quarter after quarter, consistently delivering results that exceed expectations. Now let's take a closer look at where this impressive growth is coming from, and what's fueling Pluxee's continued success. Where does Pluxee's revenue come from? Let's break it down and take a closer look at how each region contributes to the company's impressive global performance. Pluxee's footprint stretches across continents, with each market playing a unique role in driving growth and stability. Latin America is the star of the show, boasting an outstanding 14% organic growth and generating $112 million in revenue. This region's energy and momentum are hard to miss. The region's booming economies, rapid urbanization, and widespread digital adoption are fueling demand for Pluxee's services. Businesses and consumers alike are embracing new solutions, making Latin America a true growth engine. Continental Europe, Pluxee's largest and most established market, brought in $110 million, accounting for 41% of group revenue, with a steady 3% organic growth. This region remains the backbone of Pluxee's operations. That's steady performance in a mature market, reflecting strong client relationships and a resilient business model. A delayed order in Romania held Europe's growth back slightly, but the foundation is solid and the region continues to deliver reliable results year after year. The rest of the world, led by Turkey, posted an impressive 13% organic growth and $46 million in revenue. Turkey's market is vibrant and full of potential. Turkey's dynamic market is a key growth driver, with innovation and entrepreneurship fueling expansion and opportunity. Pluxee's global diversification is a huge asset, allowing the company to balance risks and seize opportunities wherever they arise. If one region slows, others pick up the slack, ensuring that growth remains consistent and sustainable across the board. This geographic mix reduces risk, supports consistent growth, and helps Pluxee weather economic ups and downs in any single market. Pluxee's worldwide reach is a major strength, giving it the flexibility and resilience to adapt and thrive in a changing world. Now, let's zoom in on the growth engines and see what's powering Pluxee's continued success. Latin America is Pluxee's growth engine, delivering 14% organic revenue growth. Brazil leads the charge, with strong demand for digital benefits and a growing workforce. High inflation actually helps. When benefit values rise, so do Pluxee's fees. Their business is an inflation hedge, thriving in volatile economies. Pluxee's brand and digital platform are essential for millions of workers. The shift from paper to digital is just beginning. Latin America remains Pluxee's crown jewel. Europe is Pluxee's anchor, stable, reliable, and cash-rich. $110 million in revenue, 3% organic growth, held back by a delayed Romanian contract. This is a mature market, so steady growth is a win. Pluxee excels at client retention and gradually increasing fees. The rest of the world, especially Turkey, is a hidden gem. 13% organic growth, $46 million in revenue. High inflation and dynamic economies make Turkey a key market. Pluxee's playbook works globally, not just in Latin America or Europe. This geographic balance is critical for long-term success. No single region dominates, reducing risk. Pluxee's diversified strategy is smart and sustainable. They're not just growing, they're growing wisely. That's the mark of a world-class operator. Pluxee's core business, employee benefits, is booming. Revenue from this segment jumped 12% organically to $234 million. More companies are signing up, and existing clients are expanding benefits. Tight labor markets make strong benefits packages essential. Pluxee is perfectly positioned to profit from this trend. The operating take-up rate, their fee percentage, rose 5%, boosting margins. Growing both volume and margin shows real strength. Not every segment is perfect. Other products and services fell 6% to $34 million due to lumpy public contracts. But this is a small part of the business. The core employee benefits segment is rock solid. Pluxee is selling the picks and shovels in the global war for talent. That's where the real value lies. Not everything is smooth sailing. Brazil is facing new regulations in 2026. The rules will increase competition and allow employees to move benefits between providers. Fee discounts to win contracts will be restricted, pressuring margins. Pluxee expects a high single-digit revenue hit and a 1% margin drop for the year. Some analysts predict slower or even negative growth in Brazil for a few quarters. But Pluxee saw this coming and has been preparing. Their tech, network, and brand give them an edge. Management is confident they'll adapt and compete. This is a real test, but great companies thrive under pressure. Here's how you know Pluxee's management is confident. They're buying back their own stock. In Q1, they repurchased 1.9 million shares for $27 million. That's a strong signal. They believe their stock is undervalued. This buyback is part of a $100 million program, with more to come. Buybacks support the share price and boost earnings per share. Management is putting real money behind their optimism. Even with Brazil's challenges, they're doubling down. This action speaks louder than words. Pluxee's leadership is betting on itself. That's a bullish sign for investors. So, what's the bottom line? Pluxee delivered 9% organic growth, strong margins, and global momentum. The dual engines of service and float revenue are firing. Brazil's regulatory changes will cause turbulence, but Pluxee is prepared. Their share buyback shows management's confidence. The company forecasts stable growth and margin expansion for 2026. Diversification across regions cushions any single market shock. Pluxee is a best-in-class operator in a growing industry. The long-term outlook is bright, despite short-term bumps. This is a high-quality company turning challenges into opportunity.